What up, Crypto Warriors and Sergeant Crypto back at it again. Today is Friday, May 29th, 2020. Only two things are genuinely scarce: time and Bitcoin. That's from Saifedean Ammous. He's the author of this book, The Bitcoin Standard. Let's get into it. All right, so I did a video the other day about the Goldman Sachs report on the economy, gold, and Bitcoin. And here are some of the here's a response from Nicholas Martin. He's the founder of Data Dash, the largest YouTube channel for cryptocurrencies. So Goldman Sachs have a presentation titled, "Cryptocurrencies, including Bitcoin, are not an asset class. Here's why they're wrong on that and so much more." 1. First, cryptocurrencies are most certainly a new asset class. They're the only known asset that can have a finite capped supply, like how he did that with 3Ps, supply, separating it from precious metals like gold that are limited to a degree. 2. They claim that the only reason people buy Bitcoin is because they expect to sell it to another person at a higher price. You know, the same exact thing you expect every time you buy a stock, bond, property, etc. That's what I said, right? 3, to them, Bitcoin's volatility dismantles its ability to be an asset. Goldman Sachs, allow me to introduce you to the multi-trillion-dollar commodity, oil, which turned negative just a couple of weeks ago. Oh, but that's a market, right? 4, they cite that Bitcoin doesn't provide a yield like a bond. Gold and many other assets don't provide a yield. Or were they referring to those lucrative negative yields? You know, the ones in Europe that penalize you for holding them. 5, supposedly they believe Bitcoin hasn't hedged against inflation. Whether directly correlated or not, Bitcoin has absolutely edged against inflation, provided returns many times over against inflation. 6, and to top it all off, they feel that though traders are interested in selling it in the short term, it negates it as a long-term investment, kind of like how people rapidly trade tech companies that inevitably came to dominate equity markets. And this with a question mark. In conclusion, number 7, I'll bet money they're going to be offering cryptocurrency investment services in the next 3 years. Let's see if their action match their words. Well said, well said, well said. Next, and if you know, I basically pretty much said the same thing in that video. I'll have it linked, of course, in the top right corner. Next, this is coming from bitcoin.com, and this is the IMF predicts banks will struggle at least 5 more years after global economy recovers. So this is coming directly from the IMF. Banks' earnings challenges emerged prior to the recent COVID-19 episode and will extend to at least 2025, well beyond the immediate effects of the current situation. They were in trouble from before. This whole global economy was in trouble before this COVID-19 pin popped the everything bubble. I asked a question here, Al. The European Banking Authority, the EBA, however, said Monday that it expects banks in Europe to be able to withstand the potential credit risk losses from the economic crisis. And my question is, how? How do you expect them to withstand it? By printing more currency? Because that's the only way they'll be able to withstand the onslaught that's going to come. This is just the beginning. Remember, people are still at home. People aren't working. People aren't paying their bills, i.e. their rent, paying their mortgages, and then it just snowballs to the banks because now the banks aren't getting paid either. So how do they expect the banks to withstand it? Unless they're going to be purchasing, or not purchasing, but just printing more currency to pay off people's debts. I don't know. So you let me know how. Next, Central banks are creating fake markets. Bank of America strategist says this is huge. This is huge because it's coming from Bank of America, a strategist at Bank of America, and he's saying that the Fed, they're creating a fake market. And he's absolutely right. Stocks have become detached from reality due to recent interventions from central banks into the bond markets, according to analysts at Bank of America. Chief investment strategist Michael Hartnett set out a number of key reasons for its unmooring of stocks, the first of which was the emergence of fake markets. Government and corporate bond prices have been fixed by central banks. Why would anyone expect stocks to price rationally? Hartnett said. Central banks have deployed a total of around $4 trillion of asset purchases over the past 8 weeks. Hartnett highlighted, and the global equity market cap has surged by $15 trillion. They're just pumping money into the stock markets, buying up bad equities, keeping everything afloat, so to speak, and it's not showing really what's happening to people right now. Currently, there is over 40 million Americans, able-bodied Americans, that are claiming unemployment right now. And those are just the ones that are eligible to claim unemployment. You have some people that are gig workers that can't claim unemployment. So the real number could be twice as much. And I think there's only 155 million out of the 330 million citizens or people living in the United States. 155 million of them are able-bodied and able to work, between the ages of, say, 16 and 65 or whatever. And they're talking about 40 million of them can't work right now, or they are claiming unemployment right now, and that's a big deal. And we also have to take into consideration the people that are self-employed that maybe can't claim unemployment, the people that are gig workers that can't claim unemployment, and people that work under the books or under the table, so to speak, and they can't claim unemployment. So the numbers could be, like I said, twice as much. The numbers really could be 60 to 80 million. So that's just nuts. Going back to the fact that the equities, or the global equity market is surging by $15 trillion. How? Who the hell is buying up all of these stocks? The answer is the Fed. The Federal Reserve, they're the ones pumping up the stock market currently, and it's not reflecting of what's currently happening at this moment with people being unemployed, because no one is buying up stocks right now. I shouldn't say no one, but the majority of people aren't buying up stocks right now. These numbers are false numbers because it's the Federal Reserve's buying up the stocks and also buying up debts. Let's go down some more. Bank of America's strategy was described as tactically bullish but structurally bearish. What does that even mean? Hartnett suggested that overall market positioning is still bearish, with policymaker causing an immoral hazard, which will force investors to buy banks to lend, and corporate zombies to issue debt in 2020. A zombie, all right? Zombie companies are those which make just enough money to continue operations and service debt, but hold little to no excess capital and are unable to pay off their debt. So they're keeping these companies afloat. That's what a zombie company is. He added that the possibility of negative U.S. interest rates, pressure on bank dividends, November's U.S. election, and peak globalization will come into focus in the fall. So we have a lot to look forward to come September, October, November timeframe. So we have a lot to look forward to. a lot. I don't even know where to end this or how to end this, but it's quite depressing if you ask me. And the fact that they spent $4 trillion, right? $4 trillion to keep this market afloat instead of giving that currency, putting that directly into the people's hands. This way they could pay their mortgages. They could pay their rent. They could feed themselves. And I'm talking about they as we. If they had given that money directly to us, then we would have kept the economy afloat because we would have been paying our bills. All right, paying the mortgages, paying the utility bills, all these other things, paying off debt, whatever the case is, and then they wouldn't have to worry about the banks going out of business. But because the bankers or banksters are their friends and they all know each other, then they will look out for them first. All right, the ones closest to the money printer, all right, or currency printer, are the ones that get the help first. Remember that. That little $1,200 that we received was just shut up money, uproar to prevent rioting in the streets, which is happening right now anyway. But that's for a different result. That's a different pin that popped on another bubble. But the fact of the matter is they gave us that shut up money. This way we wouldn't riot in the streets and burn down, city halls all over the country. But you let me know what you think. Leave your comments in the comment section below. Leave your thoughts. And remember to smash the likes, hit that subscribe button, and notification bell to get notified when I upload new videos. Thanks for watching. It's Sergeant Crypto, and I'm out. Peace.